Today is Tuesday, April 22nd, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. For the events this week, it's definitely going to be pretty light. All we got is new home sales on Wednesday, and then Thursday is going to bring us the initial jobless claims along with the existing home sales. Now we're going to get into the changes that I made in my portfolio since my last update. I previously did say that I was going to wait to trim my Nvidia and Meta positions until they recovered. I haven't necessarily given up my positive outlook on the companies, but I do think that they're both going to take a little bit longer to recover than I initially thought. So on Monday, I did decide to trim Nvidia and Meta both by 40%. These are my two largest positions in my portfolio, so even trimming both of them by 40% still leaves me with a pretty good amount of exposure. So let's check out the Nvidia chart here for a second. That blue arrow is going to represent where I trimmed that 40% on Monday, and at that point it had fallen below this support level, and it was also trading in pretty much the same spot as it was 2 weeks ago. If we zoom out of the chart a little bit, you'll see that ever since the downtrend started, it's pretty much been in the same continuation pattern. It'll go down, recover some, but then ultimately go down farther and make a new lows in the process each time. And like I mentioned before, Nvidia was my top position in my portfolio, and this is not how I want the charts to look for my top position. I'm going to zoom in and then redo the 3 previous new lows. One slight encouraging sign is that the price did go up today. It's not by much, but the price is still above the old previous new low. So I'm going to be watching to see whether the price stays above or below that line, because if it does cross below, by looking at the charts, it makes it seem like it's just going to keep doing exactly what it's been doing before. So what I'm going to be looking out for the bullish reversal is first off not to go below that line, and then also make it above this resistance level. So if that happens, and let's say the stock ends up over here, even if that point it goes down a little bit, but ultimately goes up higher, that's going to be the bullish reversal pattern that I'm referring to, with the stock making higher lows each move up. If we add in the 5 and the 15-day moving average, you'll see that Nvidia share price is below the 5-day, which is also both below the 15. The 5-day has attempted to cross the 15 4 times in the last month and a half, but has ultimately been rejected every single time. So the next time that it tries, if it doesn't shoot up above it, I definitely think that this stock has some more room to go down. And then if we add in the MACD chart on the bottom, you'll see that the MACD line crossed below the signal line, which is always a bearish signal. So it was ultimately that, the 5 and the 15-day moving average, and being so close to the old previous low, which made me decide to trim that 40%. This is going to be the chart for Meta. That blue arrow once again is going to represent where I trimmed that 40% on Monday. Honestly, I think that this chart looks worse than the Nvidia chart. The reason it was my number 2 position for so long during this downturn was that the charts kept faking me out. You can see that the share price dropped straight down to this support level. It only spent a few days below it before ultimately getting back above it. So at that point, I thought that the position was back on track to going positive. It then briefly dropped down below just like it did before, so I didn't do anything. But then the share price didn't even bother hanging out at this support level. It pretty much dropped straight down to this next lower one. So at that point, I just looked at it as a market overreaction. And then I was feeling pretty good about that for the next few days. And it even managed to get extremely close to the support level. And then if it had crossed back above it, I would have been back on track to being bullish. But as you can see, it never quite made it above it. At that point, it did spend a day at this support level before crossing below this third one and making a new low in the process. Same as Nvidia, I do think that it's too good of a company not to have in my portfolio, but it definitely doesn't have to take up as much weighting as it did before. If we put the 5 and the 15-day moving average, you'll see that just like Nvidia, the share price is below the 5-day, which is also below the 15, and the MACD line is also below the signal line. They do post their earnings at the end of the month, so hopefully we get some good news. With the money that those sales generated, I decided to increase my Disney position by 100%, and then Spotify, Sprouts Farmers Market, and Welltower all by 30%. When I originally entered into the Disney position, I felt really good about it, but I only put 3% of my portfolio into the position. It had then fallen 25%, which is why I decided to increase it by so much. And even by doing that, it's still not one of my bigger positions. Let's quickly take a look at all 4 of those positions, and you'll notice some common patterns. With Welltower, in relation to the 5 and the 15-day moving average, the share price is above both of them, and the 5 and the 15 are pretty much exactly in the same spot. So with only a couple of positive days, the 5-day will eventually get above the 15, and at that point, we'll have exactly what we're looking for, which is the share price to be above the 5-day, and both of those above the 15. And then today, the MACD did cross above the signal line, which is always a bullish signal. And then they also report their earnings on April 28th. So I certainly feel pretty good about this. Next up, we got Spotify, and you'll see that the share price is already above the 5-day, which is also above the 15. So we got exactly everything that we want right there. The MACD is also above the signal line, and they report their earnings on April 29th. And next up, we got Sprouts Farmers Market, which is going to look exactly the same as Spotify. The share price is above the 5-day, which is also above the 15. And that black line that it just crossed is going to represent the longer term trend line. So the fact that it crossed above that is definitely definitely bullish. MACD is above the signal line, so that's always good. And they also report their earnings on April 30th. And next up, we'll take a look at Disney. And this is where that 25% loss came from, but it was able to just make new higher lows. And the share price did just cross above the 5-day, but both of those do still sit below the 15. So it's going to take a few more positive days for that to switch over. But what we do have is the MACD already above the signal line. And they also have earnings coming up, but those ones aren't going to be until Wednesday, May 7th. So I feel really good overall about taking the 40% out of Nvidia and also Meta and putting it into these 4 positions. Because at least for the short term, I do think that they're going to perform better. So if we take a look at the SPY chart, you'll see that it's recently made higher lows. Having just the first higher low definitely doesn't justify the market reversal. Because even though right now we do have that higher low, it could always go by the wayside. So what we're really going to be looking for at some point is that second higher low, which can technically be anywhere on the chart. But wherever the market decides to make its next higher low, it's just going to have to be higher than the previous one. I think at that point, a lot more confidence will start to flood back into the markets because there's definitely a lot of cash sitting on the sidelines right now. The SPY price did just cross above the 5-day, but they do still both sit below the 15, and it's only by a little bit, but the MACD line has crossed above the signal line. So I'm not super bullish on the markets right now, but there's enough going on in the charts that lead me to believe that a bullish reversal is more likely than not. These are going to be all 14 of my current positions. Right now, Microsoft, Welltower, Costco, Meta, and Spotify make on my top 5, and those are going to make up 43.68% of my portfolio. I do technically still have a little bit of cash left over from when I trimmed Meta and Nvidia. Before I did that, I was just above 5% invested, and after making those new moves, I'm at 7.81% cash. So I use most of it, but not all of it. But that puts me at 92.19% invested, which for the current market conditions, I'm okay with. But once I feel like I got confirmation of the bullish reversal, I would like to get that 7.81% cash closer down to 5. And if that happened, I would be leaning on increasing my Shopify position, which is my third smallest, but also has a 20.3% loss. And then Mind Medicine, which is my smallest position, but also has an 18.72% loss. So I think that those are going to be good dollar cost average opportunities. But before I do that, I'm going to wait for the market confirmation of the bullish reversal. Other than that, I don't have any real changes that I plan on making to my portfolio. Since my last update, Pershing Square had a gain of 2.37%. My portfolio had a loss of 2.57%, and the S&P 500 had a loss of 2.02%, which brings us year to date. Pershing Square is at a loss of 6.24%. My portfolio is at a loss of 7.95%, and the S&P 500 is at a loss of 9.9%. That's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.